Hey guys, welcome and thank you for coming early in the morning. I was here early and I thought, I hope some people turn up and it's not just me standing here by myself, but nah, it's great, actually really good turnout. So what I wanted to do today, we've got about 30 minutes to chat and then about 15 minutes of questions, okay? I'm gonna race through it. Now what the whole talk is based on is basically chapter 4 of the book, okay, that I've just written. It's in pre-release, so if you find any spelling mistakes or any grammatical errors or anything like that, by all means email me and tell me because we'll fix it up. But it's not printed yet, but it will be printed. Okay, so we're just in the stages of finishing off. But what I've done is I've effectively taken what I know from property, and I've done 20 years of property. You know, I've literally done mortgages. I've been a mortgage lender. I've been a mortgage broker. I've been a sourcing person. I've done sales. I've been a real estate agent. I've pretty much done everything there is to do in real estate. Certainly residential real estate. That's my specialty. Okay, so what I'm going to talk to you today is actually straight out of chapter 4 of the book, which is the 10 greatest deceptions of the real estate crowdfunding industry. Okay? Now the reason I'm going to tell you the 10 greatest deceptions is because I can sit here and teach you the framework with which to invest with. Okay? But that takes some time. And if you want to know what the framework is, download the book. If you go and you can jump on your smartphones now or go out to our booth and actually fill in the details. But if you go to that webpage, property.ypc-group.com/epic, you can download the book right now, okay? So today is going to be a really abridged version of that chapter, okay? And there's a lot more information in there about crowdfunding. But the whole motivation behind me doing this today was quite simply because crowdfunding is new, okay? But property or real estate is not new. But the way that people can get away with, you know, misrepresenting and in fact being fraudulent and all these sort of things, what you'll tend to find is you can potentially, they'll start to rehash them into the crowdfunding space. So you have to protect yourself against that, all right? Now, I'm not going to sit here and say, and I'm never one to say, don't do this, or this you should never do, or you know, these sort of things. So this whole talk is not about telling you what not to do. So when I talk about, you know, guarantees and buybacks, I'm not saying don't do them. But the whole essence of what this is about you becoming responsible for what you do, okay? And not just listening to what a salesperson says, not just, you know, listening to all the, what I call hype and BS. Does everyone know what BS is? Yeah, starts with bull, ends in it, and there's a sh in the middle. Yeah, and the reality is, because there's so much money attached with real estate and because there's so much money attached with property, okay, there's a tendency as marketers and salesperson, and make no mistake, I'm a salesperson too. Yeah, I have a business which is YPC Group. Yeah, we have about 50 staff and I have 20 full-time staff that sit on the phone all day, every day, making phone calls, selling UK and London property. Okay, I've done property in Australia, I've done property in Singapore, I've done property in Hong Kong, I've done property, you know, so I've done lots of it, okay? I know it very, very well. And what we're going to go through today is these 10 things. And I'm not saying that everybody's doing it. But in fact, one of the key things you need to do in any property investment, and in fact any investment, is first of all work out a framework with which to invest, know the rules of the game, and then apply those rules of the game and create a network around you that you trust of people that actually aren't going to deceive or misrepresent or rip you off, okay? And that's what I'm saying here. I'm not saying don't do any of these things, but I'm saying be aware of them, and by becoming aware and doing the research on them, you should be fine, okay? One more disclaimer, if you like. I've been involved in over 5,000 property deals, okay? And whether we're talking individual properties or bulk deals, okay? Over 5,000 I've seen get done. And when I say involved, sorry, I've assessed, okay? Some of those I haven't actually done. A lot of them we have, okay? And in that time, I reckon about 1% of deals fall over. They fall over because of stupidity on the part of the people selling them, stupidity on the investors, stupidity on the, you know, or downright fraud. But the amount of times that you have downright fraud is actually very small. Yeah? And the amount of times you have stupidity is probably a little bit bigger, but still very small. So 1%. So what this talk about is about protecting yourself against the 1%. Because I can tell you, losing your capital, yeah, is much worse than going for a lesser return on your capital. It's far better to protect your capital. Yeah? So that's what today's about. Okay. So, real estate crowdfunding may be a new thing, but real estate is not. All right, so this talk today is all about real estate applied to crowdfunding. And a lot of the stuff in the book is actually, if you've read any of my other books, it's similar concepts, okay? The first or the second chapter of the book is all about the concepts that I talk about in my usual day job, if you like. The 3+1 plan, which is the other book that I've written, okay, it talks about a lot of the concepts here, all right? Massive potential, yeah? The great thing I love about crowdfunding is that it's open to the masses. The great thing I love about real estate crowdfunding is it's open to the masses, but unlike most other crowdfundings, which have no real security in the investment, yeah, realty crowdfunding does. It provides security because you've got real estate. Yeah, and I've lived in Singapore now for 2 years. I know Asia quite well. I've been running seminars here for 4 years, and I can tell you the one thing you guys love is real estate. Yeah, so crowdfunding is just a new take on an old thing, all right? But, and this is the most important thing, the responsibility still lies with you. Don't rely, and we heard Francis yesterday talk about the legal implications. Don't rely on the government to protect you. Take responsibility yourself. Okay, and the final point, do your research. Yeah, absolutely, and we'll teach you that today and certainly the book. Okay, so let's get into the deceptions. Deception 1 is the values and rentals, all right? What you're gonna find, and naturally, yeah, you're gonna find difficulty valuing things that aren't sort of stock standard. So a residential property, very easy to value, yeah? Hotel room, holiday resort, very difficult for you to value, all right? So you've got to, at some level, decide, are those values correct? Because the reality is if you're buying equity into that property, okay, which is, the investment, then who's gonna buy it? If it's way overpriced and all their figures are wrong, you're gonna have difficulty. If the rentals are ridiculous and way high, yeah, the cash flow is going to be terrible. It's not going to be attractive to an investor. So you've got to be able to do your research. And look, I'm not going to take you through how to do that now, all right? But what I am, it's in the book, okay? We'll teach you the basics and how I do my quick due diligence in under 10 minutes on a smartphone. Yeah, I can sit in an exhibition and I can assess whether I really want to go forward with an investment. It's a little bit harder if it's not a stock standard like a resi property or something like that, but you can still do it. The rules are, if you don't understand the asset, yeah, don't invest until you do. So if you're getting some obscure asset thing like you're buying, land in Bulgaria and you've never been to Bulgaria and you don't know the market, you don't know the rules that apply to the game, then don't invest until you do. Yeah, don't let a salespeople throw you into it, okay? All real estate is sold with urgency. If you don't buy this now, you're gonna miss out the fear close, yeah? All right? And it's not right. I have a thing which says the best deal in property comes along every day. If you don't buy this one, there'll be another one just as good, if not better, along tomorrow. And if you go with that, actually, you'll be fine because you won't be sold by slick salespeople. All right? If you cannot work out the value of rent, be very careful about investing in it because at the end of the day, if you're buying something or the thing that the investment team presented to you is bought at a good price, a fair price, and the rentals are realistic and the investment stacks up on those two bases, a lot of the other stuff will correct itself. So this is the key fundamental. Deception 3, the vendor finance, all right? Now again with this, I'm not saying you shouldn't do it, but what I'm saying is not always a good thing because what happens is, and one of my general rules is that I don't invest if the bank won't invest because the way I look at it, banks are pretty conservative, yeah? So, vendor finance isn't always a good thing. Yeah? If a traditional lender isn't involved or is involved, there's another layer of protection. They are going to do their own due diligence. All right? So just be careful. I'm not saying don't do it, but I'm saying just be careful about how you do that. The problem I have with it is if the vendor's able to provide you finance, yeah, there must be a big margin in there for them. Yeah? And sure, they can delay it and there's different ways of financing it, but you've got to look at whether that's fair value you're getting. All right? Don't be deceived by the lower entry price. So I see some of these student lets and hotel rooms, and I'm not saying they're bad, but what I'm saying is, the vendor finance proportion makes it your entry level smaller, which makes it easier to get into, which makes you think, oh, this is a great investment. But actually, the great investment has nothing to do with the entry level. I'd prefer to put £1 million into a property, or dollars into a property, yeah, than put 25 grand into a property that actually is way overpriced and actually, it's got vendor finance and all that sort of stuff, but the fundamentals don't stack up. I'm a fundamentals investor, so everything comes back to fundamentals. And that's all I'm saying here is do your research, work out what the fundamentals really are for the investment, not the marketing spin that surrounds it. And to a degree, vendor financing is often the marketing spin bit, not the fundamentals. Yeah? Okay, loan security. And this is by far the best thing about realty crowdfunding, yeah, is that you get the security of a property, real estate in most cases. But you've got to look at that and you've got to trace it and make sure that you are getting that security. Because some of these investments, they talk about real estate, they talk about how you got the security, the property and all this sort of stuff. But if they've taken a first charge, and that first charge, yeah, plus what you owe, and even if you've got a second charge, if there's not enough equity after the first guy gets paid off, then you're not getting your money back. So you've got to research into those things and look into those things. And when you do it, you'll be fine. And look, always don't accept the word of a salesperson. Make sure you get things in writing. Make sure you read the agreements. If you have to, send it off to a solicitor. Pay the money up front, because I can tell you, if you do this research up front before you invest, yeah, then you don't regret it down the end. And I've been in this game 20 years. I've seen so many scams and I've seen so many people. I sit down with about 200 people a year and talk strategy on their portfolios. And you know the thing that I find the most often than not? And these are people with 5, 10, 15 properties. Yeah? Is that they're going to have a couple of properties there where they sit there and go, don't know why I invested in that. You know, I went to an exhibition or I did this and I just thought it was good and I bought it. And I regretted it. I know I shouldn't have. Because they didn't do the research up front. Do the research up front. Yeah? Because when you look at it, you know, and I was speed dating. Speed networking. Yeah, picked up a few cards. I was speed networking the other day, and people were talking about a particular hotel investment that has gone bad. You know, and it's interesting. I saw that, and I looked at it, and when I looked at the actual things, I wasn't going to invest. You know, but actually a lot of people did, and I think they said 130 Singaporeans. Was it 100? It was 130. Yeah, 130 Singaporeans invested in that. But it was something at the time I was like, you know what? I know that area, you know, and I know these guys and the structure they're using, and I'm not comfortable with it. Yeah. So, deception 5: guarantees and buybacks. Now, I'm not saying these are bad, but here's my definition of the way I look at things. All right. I look at a guarantee and buyback from this perspective. If the guarantee and buyback is about me or as a promoter or as a developer or my role, if the guarantee I'm offering is about breaking down the relationship resistance, in other words, I've just met you, yeah, and I'm asking you to invest. If I'm going to take away some of those fears that you've got around our relationship, around past performance, around certain aspects of the investment, I've got no problems with that then. But when the guarantee is about hiding some lack of fundamentals in the property, yeah, which is what my fear with some of the vendor finance stuff is they can't get normal finance. And understand specialised assets, you know, like I know I see some of the sort of the Thai properties and things like that. It's hard to get finance in Thailand. In Indonesia, it's impossible. I don't even think you can get. Can you get finance in Thailand? You cannot. If it's foreign owned. If it's foreign owned, yeah. Yeah, so you can't. So you've got to go to something like, you know, crowdfundings or things like this, all right? So I'm not saying these are bad, but I'm saying do your research, yeah? Now with these guarantees and buybacks, if it's masking a fundamental problem with the investment, then you've got to assess that for where it's worth. I'm not saying don't invest in it, but take that as the overall investment, okay? So you may have a 35% return on investment and you're prepared to accept the risk that this might go wrong. Yeah, risk return, you're familiar with that? Yeah, oftentimes your low risk will have a lower return, your higher risk will have a higher return. That's normal. But you've got to assess where you're comfortable with and know what those risks are, more importantly, okay? And doing the research will allow you to work that out, all right? So my rule is here, who's the company making the claim? So if they're saying a guaranteed buyback in 5 years' time, who's the company that's actually saying that? Is it just the guy selling it? Yeah? Is there a company backing it? You know, who's the company backing the claims and can they afford it? You know, so if they're making a claim they're going to buy it back, how are they going to afford to buy it back at, you know, 15% increase or whatever it is? Yeah, look at the company that's making those claims and look at the assets that back them. Yeah, because I've seen so many of these buybacks and things like that fall foul when the market, which was doing this, all of a sudden goes like this, and those companies are nowhere to be seen anymore. Yeah? Deception 6, the area. Yeah, be careful because I'll tell you, I can make any area look absolutely fantastic and investment grade. Yeah? And even the worst areas, I mean, think of some slum in, I don't know where, some country, wherever, whatever, an absolute slum. And what I can do is I can make it look really good, because you know what I can say? Oh, it's up and coming. Lots of investment getting spent there. Yeah? So be careful, do your research. In the book, I actually go through how to use Google. Google is your best friend. Yeah? I spend lots of time on Google. I have my smartphone and I sit there and just go like this and do research it. And I've got certain keywords that I ask. Like, if I know, for instance, it might be, Orchard, Orchard Road. If I'm researching Orchard Road, I'll write Orchard Road investment. Yeah? Orchard Road regeneration. Orchard Road gentrification. That's a word for the US they use a lot of, all right, if you're doing there. But these sort of things, all right? So importantly, the rule here, you can change a property, but you can't change an area. Yeah? You don't have the ability to change an area. So if you pick a good area up front, or an area that you already see is being invested in and regenerated, great, because then the property, it can be the worst. I used to operate the worst house, best street. Yeah, because I can change the house and I'm already in the best street, and that's how I'd make money. Yeah? Deception 7, the management team. Okay, now this is more about if you've got an ongoing investment. All right, if it's just in to build it, and then you're out, it's probably not so much of a thing. But if it's, say, students or hotels you've got over a longer period, the management team becomes important. Yeah? And here, check who the managers are and their experience. Are they actually in place? The number of times I've seen, these hotel things happen, and people say, oh, but they've done this and they've done that, and then you look and you go, well, where's this company set up? Where's this management company? Oh, we won't set it up until 3 months before completion. It's like, but hold on, you're saying they've got 20 years of experience, and they've got nothing there. And then, you look into a few of these things. Now, I'm not saying you don't invest in that, but be aware of it and add that to the list of risks. Okay? Deception 8, the future market. Now, this is one that, estate agents and agents all around play this game, all right? And the unfortunate truth is that most people don't really understand what we mean by future market or trends and cycles, because actually, most of the market, now, Singapore is a little bit different. Singapore is what I still call an immature market, because Singapore is much more like this. It's becoming a mature market. And I have to say, having lived here now and had the lovely MAS rules and the cooling measures and all this sort of stuff and the TDSRs, the government gets very involved with that. And actually, I have to agree with them. As a property investor, it hurts that if I want to buy a property, which I'd love to buy a property here, yeah, I've got to pay 15% additional buyer stamp duty. So I ain't buying a property here, not until they drop that, But they get involved. But the reality is, if you look at, say, Australia, if you look at the US, if you look at the UK, if you look at South Africa, if you look at a number of different markets, they follow predictable trends. And if you want to and you don't understand it, download my book at, oh, that's very small, ypcgroup.com/property-cycle. Yeah, have a read of that. And it's got stats in there from all different countries around. It's got the different ways to look at them and that sort of stuff, okay? So it's a free downloadable book, and it'll give you an understanding of the future. So when a salesperson says to you, oh, look, it's gone up 30%, and it'll keep doing that and you'll make this much money, you can go, hold on a sec. If it's gone up 30%, that's actually this much, and the likelihood is then part of the cycle is that it's probably going to now taper off. I mean, people are running around talking about right now, the property bubble in the UK. It's absolute rubbish. Yes, if you're talking about zone 1, if you're talking about areas of zone 2, absolutely I would agree with that. Doesn't mean I won't invest there, but I'll be very particular about how I invest and what I invest in. But you go out to zone 3, 4, 5, there's a huge opportunity. You go out to the commuter towns now, massive opportunity. Yeah, and even some of the cities that are around the UK, fantastic. Yeah. So understanding the cycle. Singapore right now, if you look at how many apartments are coming onto the market in the next 2 years, I probably would be very sceptical about buying them unless you're prepared to hold them for long term. Then fine. Yeah, for most of you guys, Singapore residential property is your core strategy. And one of the big fears I have about most people that I meet is they don't have a strategy. Their strategy is what's called a deal hunter. In other words, I'm a salesperson, I'll present a deal to you and you'll make a decision based on that, based on no strategy. Whether it fits your portfolio, existing portfolio, or your future intentions, you don't know. You just look, oh, looks good. Oh, you're going to give me 3% off. Great. I'll buy it. And that's how most people build their portfolios. It's the wrong way to do it, but unfortunately, that's how most people do it all around the world. Everyone I meet with. Yeah. Yet actually, the people that I really see making good money, they have a strategy, they stick to it. You know, as a business, my expertise area is in new build property, residential. Yeah. If you ask me about some of these, you know, Thai property and Indonesian properties and those sort of things, I love talking about it. Yeah. I'm very interested in it. I do know a lot about investment, but those markets, I don't know the rules that apply to the game. You know, China, you know, I'm speaking to someone yesterday and they're talking about how, you know, well, yeah, you got to pay these people off and then you can't say anything because if these people find out, you know, then they, you know, it's like, well, that's a new market to me, you know, because the markets I've delved in, you know, which is Australia, UK, Spain. Actually, Spain was quite interesting. When my solicitor got up and turned around, while my other solicitor actually put the black bag on the table, and then we sort of turned around and the black bag was gone, and I'm like, what the hell's going on here? So I wasn't turning, but these guys were, and it was like, is this really happening? You know, because there was the black money. I don't know if you've heard of that. Apparently, it doesn't happen anymore, but it did there. Okay, strategy, deception 9, exit strategy. Okay, especially if your investment is reliant upon the exit strategy, yeah, then you've got to actually look at it. You know, build it and they will come. You know, it may work in the Bible, but not in real, you know, real estate. Okay, you've got to work out your exit strategy up front. Yeah, so when you're talking to these salespeople selling you this stuff, what is my exit strategy? How am I getting my money back? What happens if those properties don't sell? What happens if they sell for less money? All these questions you need to ask, and there's questions in the actual book. Okay, yeah, many developers rely on marketing agents. Yeah, and that's the reality. Most developers will say, well, I'm a developer, I don't sell. Yeah, I give it to a marketing agent. Whereas I mean, my company, we actually have the development arm and the sales arm. I mean, they're separate companies, but the great thing is it provides us with a guaranteed exit strategy, which is great. You know, so ask some questions about that, especially if your return on your investment is linked to those getting sold. Yeah, check the exit strategy. You have to. Okay. Finally, deception 10, legal recourse. Yeah, what if the S hits the fan? Yeah, what happens? So look into that, explore that right now. I mean, the great thing is, you know, many countries have a robust financial system, many countries don't. So if your money and your investment is based on a country that doesn't have a robust legal system, you know, well then you've got to take that into account as a risk. Again, not saying don't invest, but, you know, put on your devil's advocate hat. Explore the possibilities. One of the things I talk about is, you know, and I love it. If I want to check how an investment is going in terms of risk and this sort of stuff, I explain it to my wife. Yeah, try doing that, you know, and then you'll get all the negatives and the possible things that can go wrong and everything. And I love that. I mean, we have a good relationship. You know, I explain it to her, she explains her fears, and then I say, don't worry about that. You know? But sometimes she raises things, I think, you know what, I better check that out because she's good like that. And you know, little things like that, it's a really simple thing to do. Yeah? But actually, I'll be honest, I've never bought property at an exhibition on the day. Yeah? I have this rule that says go home and sleep on it. Yeah, the sleep test. Because for me, the best selling property comes along every day. If I don't buy that one today, there'll be another one just as good, if not better, come along tomorrow. And touch wood, that has allowed my portfolio to consistently grow, and I've never had to go back to zero and start again. Touch wood. But to be fair, what I've found after 20 years, and it's not 20 years of full investing, it's about 15 years, you know, that actually has, you know, been very good and very robust for me. Yeah. And early ones tend to get paid out, the later ones lose out. Now, if the worst happens and, you know, the investment is going south, what I've found, if you get in early and you start to make a scene, not on social media, stay off social media at the start, but direct to the company, threaten social media, oftentimes those people get paid out because the people who are running this scenario think that they may be able to get through. But then if it falls off, and once they know it's over, nobody's getting paid back. And then it's the legals and all that sort of stuff. And I've just had to go through, you know, £482,000, you know, of pain, yeah, because basically, and to be fair, it probably won't end in that much pain because the solicitors are going to pay out in the end. You know, and it looks like we've almost reached 4 years it's taken to reach an agreement with the solicitor's solicitor, yeah. But, you know, because things went wrong. But actually, some of the interesting things, some of the clients got paid out early, but the other guys have had to wait. So hopefully it won't be good. But stuff does happen. It does happen. Yeah? You know, but it shouldn't happen that often if you do all these things. Okay, I'm being told 5 minutes left and I'm actually on time, which is good. So guys, look, that's the 10 deceptions. So I'm going to open it up for questions. But look, if you're interested, jump on your smartphone, download it. Yeah, it'll go straight to your thing. All right, guys, thanks very much.